Right, good evening everyone. Okay, welcome to today's sharing session over here. Okay, so for very quick introduction, for those of you who are joining in first time, what we do for this month is every week we're gonna introduce kind of like a mini strategy, okay, or you can call it like the strategy series, right? So we've been covering like support and resistance, supply demand. We did cover RSI divergence as well. So today what we'll be covering in the topic over here would be more on the Elliott wave perspective. Okay, so Elliott wave itself is a very complex and sophisticated strategy, or even if you talk about method of analysis, it's pretty complex. Okay, but today obviously we won't go into like the super detailed kind of things in terms of like labeling, in terms of Fibonacci. Okay, but what I thought would be to really give you guys some practical steps as a trader. What are some of the important aspect or essence elements of Elliott wave that you can actually use and apply directly into the technical analysis portion. Yeah. Okay, so with that said, let's get started. Okay, ideally what we're gonna do is if I have some good case studies moving forward from here, or even opportunities, then we'll be using those as direct, sharing with you guys over here. Okay, so first up, right? So there's no PowerPoint or sort because this entire month series here, we're gonna make it very, very practical. Okay, immediately we're gonna talk about introduce to you the principle, and then we'll look at like live market charts and apply them straight up. Okay, so now before you have, if you guys have any impression about Elliott wave before, I would like you to put those aside. Okay, and just listen to this topic over here with an open mind. Okay, so first up, right? Elliott wave, I would say if you really want to get started, okay, first and most important step here is to first being able to really identify and differentiate what is impulse and correction. Okay, for me, that is really the essence, and I would say the building blocks of the entire Elliott wave principle. Okay, so if you want to advance maybe in the future into more advanced method of labeling using fibs and etc., okay, this fundamental here needs to be very, very strong, right? Which means that the foundation needs to be there first. Okay, so what is impulse and what is correction? Okay, if I were to draw it out and then later we'll show you in some charts, right? Impulse are basically moves that are very, very fast and the momentum of it is strong. Okay, so it can be in either direction. It can be an impulse to the upside. It can be an impulse to the downside. Okay, and most of the time when you see me do, in other sharing, when I talk about impulse, I usually draw a straight line like that, right? So an up impulse and a down impulse. Okay. On the other hand, a correction is basically the opposite of it, which means that the market is basically not going anywhere very fast. Okay, the market is always moving, just that you want to assess if the momentum is strong or not. Okay, or you look at the time that it took to develop. Okay, so if the market take a way longer time for it to develop, then likely that will be a correction. And most of the time when I draw it on the chart, I usually draw a wavy line, right? So this wavy line can be horizontally on the flat side of things. It can slant to the upside. It can also, of course, slant to the downside, right? Okay, so if you see me draw wavy lines, usually that's how I indicate a correction, right? Straight line, I indicate as an impulse. Okay, so if today we're gonna jump into, just any technical chart, any time frame, you'll be able to kind of like identify what are the impulses and what are the corrections, right? So I think very, very straightforward over here. Okay, just to highlight, some of the impulses. Okay, I think you can see this here, right? The move to the upside is pretty strong. Okay, that will be an impulse. If you take a look at even this here, you can see the move to the upside is very clear cut and very strong. Okay, that would also be an impulse. Over here, this little push to the upside, I would even categorize that as an impulse as well. Okay, so it can come in a slight variation of shapes or even sizes. Okay, but the idea again is you want to identify it as the momentum, right? So if you take a look at this move down is pretty strong too, right? Okay, that is basically an impulse, and this move up here is also classified as an impulse. Okay, so I think with some of this example, you can see what are the impulses, yeah? Okay, if I were to put this, of course, this is also an impulse, right? And the move up here is relatively strong as well. Okay, but if you put things together, okay, you would see that, oh, okay, this seems a little bit more on the sideways, right? That is what I mean by scale. Okay, because the market is always moving, it's not going to be stagnant. Okay, and you realize that within the bigger correction, within it, you might also have some bit of impulses here. Okay, and if I were to put it, in another perspective, if you take a look at this entire up move, okay, within it, okay, we do have that impulse, correction, impulse, correction, impulse, and then of course over here is doing a bigger correction, right? Okay, so don't get confused right now first, but I want you guys to really be comfortable, understanding what is impulse and what is correction. Okay, because it can come in various sizes and shapes, right? So the idea again, strong momentum, impulse, slow developing move, correction. Okay, it works in multiple time frame. Okay, now if you take a look at 30-minute time frame, the things you see might be different. Okay, but the principles are same, right? You can see from this high here, it came down very, very strong. That is essentially an impulse, and then what happens? It goes up very, very slow. So that is a correction. It came down very strong. It went up a little bit strong as well. It came down strong. So this is basically quite a few impulses together. Okay, and if you start to combine them as a whole, okay, you group them up, then this is basically a correction. Okay, so impulse and correction, the principle works in multiple time frame. It works in any chart as long as you have a technical price move. Okay, so that is the first thing you need to be very, very comfortable with. Okay, impulse and correction. Now, once you're okay with that, okay, I think that shouldn't be too difficult, right? It might take a little bit of practice for you to identify what is impulse and what is correction, but you should be getting a hang of it pretty fast. Okay. Now the second step over here is you want to start to categorize, or I would say, okay, group the impulses and correction together. Now, when you start to do that, right, you realize that you do have three main groups. Okay, so the first one here is you have an impulse push, okay, followed by a correction. Okay, so you imagine like jigsaw pieces, puzzle piece. You take two pieces and then you mix and match them together, right? So you have the first category here where we have the impulse, then correction. Okay, then you have the second category where you have like impulse, then impulse, right? So basically you have two impulses together. And the third category over here is basically impulse, then crawl. Okay, so I just give it another name, but essentially crawl is also a correction. Okay, let me show you this tree on some live example if we can see it clearer, right? Okay, I think dollar index here, okay, on this scale, at least on a 4-hour time frame, okay, impulse correction is very clear, right? The first category, okay, impulse then correction. So where is it? You can see this, a push up, a correction. Okay, this is one category. Okay, so what after that, what we have an impulse, and then this is also a correction, right? So that's your first category. Okay, it can go in both direction. If you take a look at this came down as a fast move, that's your impulse, and then this goes sideways, right? Very, very slow, that is your correction. Okay, so you can go either way, right? You can go up, impulse correction, or it can come down, impulse correction. Okay, so that's your first category, yeah? Okay, now other than that, okay, the next category here is impulse, then impulse, which is basically, what I call is V-shaped formation. Okay, where can you see that? This one here, you can see V-shape, right? Mini impulse down, mini impulse up. Here as well, you can see that V-shape. right? And then of course over here as well, V shape, okay? So this one here, I would even categorize that as a V shape, okay? So quite a bit of V shapes here, right? Even here you can see, okay? This one here as well, okay? Even this is considered a V shape, okay? So you realize that what we're doing is basically taking impulses and correction and then mix and match them together, right? So you get like first category, you get the second category, and then the last one, okay, is what we have as impulse then crawl, okay? Now, this is not like the clearest that I can find right now, but let me maybe go back a little bit, okay? Over here, okay? So can you see this? This is a very obvious impulse, right? I think all of you would definitely agree that that's a very strong move, okay? But then after that, it starts to go higher, but as a whole, you look at this as a group, right? It's very, very slow. Okay, in fact, it's going up in a very slow manner. You can call it a correction, but I kind of like give it a different name to just differentiate, between this pattern, impulse and correction down versus this one here, which is impulse and then it continues to go up in the direction of the previous move, right? So that's the slight difference, okay? Now, if I had to clean up everything, okay, and I will draw it out for you, right? What's the difference between impulse, correction, versus impulse, and then the crawl, okay? You realize that the second part of this is considered slow, okay? It's just the difference in the direction of how it's developing in relation to the previous impulse, and that's how we give it a different name, okay? So this one here is an impulse correction. This one here is an impulse then crawl. Okay. So if you take a look at the chart, okay, of course it comes in various sizes as well. Sometimes the crawl here can be smaller. Sometimes it can be bigger. Okay, but you can see the nature of it, the shape of it, how it looks like. Okay, it can come in multiple time frame as well. Yeah. Okay, so just to show you if we get right, can you see this here? Okay. So this one, initially it dropped pretty fast, and then after that, it starts to slow down. Okay, so this is what we call an impulse, and then followed by a crawl. Okay, you can see here is V shape, all right? And then what happened is it goes up and then it comes down very fast here as well. So that's also a V shape. Then you have the impulse followed by the correction. Okay, so you can see that as well, right? Sometimes on the chart, you might not be seeing any category or any group very, very clear. Okay, in that case, most of the time, I would just suggest, just leave it. Okay, move on to something that you can really identify the pattern. Okay, but of course, looking at patterns at the back, like what has happened historically, might not be very beneficial to us as traders because you don't get any opportunities, right? We always focus on the rightmost, right hand side of the chart to kind of identify opportunities. Okay, but as of now, I hope so far with this explanation, first you guys are able to identify and differentiate, understand what is impulse versus correction. Okay, second, you kind of understand the patterns, right? We talk about how you combine impulses and correction. Generally, we have three categories, right? So that's something that hope so far through this little 15 minutes of sharing, you guys are familiar with that. Okay, that's very, very important. Okay, it's progressive, yeah. So you can't straight up jump into patterns without first understanding impulse and correction, because again, the foundation of this is understanding and identifying impulse correction. Put them together, it develops into a pattern. Okay, now once you're able to do this too, right? That's where the magic comes, right? That's where the aha moment comes. Okay, for a trader, right? So what we do next is, very, very easy. Once you are able to identify the patterns, okay, we can start to project the direction. Okay. Now, so just now we mentioned, right? In general, we have three. Okay, we have three patterns, three groups. Okay, impulse, correction, impulse, 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 crawl. Okay, let's go back to the very first pattern combination first. Okay, so what is that pattern combination? The pattern combination here is impulse followed by correction. Okay, so you have an impulse push and then a correction. Now, every time you see this, okay, of course, this one play out perfectly Okay, nothing is going to be 100% in the market, of course, but it's high probability. Yeah. So every time you identify this pattern, you can project the next direction is going to continue to the upside. Very high chance. Okay. So same thing. What happened? Impulse here, correction here. So you identify the pattern. What's next? Okay. You project the direction. When this pattern you saw it, very high chance it will continue to the upside. Okay. So this is the first category, right? It works in both directions. Okay. If you take a look at this, impulse, correction, project it to the downside. Yeah, but of course, not everything is going to be 100%, right? Just let me show you over here. This is an impulse. This is a correction. It did not work out in this case. Okay. Now, there's nothing 100%. I'm going to be very transparent with you. Whatever strategy you use, there are bound to be things that won't work out all the time. But to me as a trader, right, just from this chart, okay, let's say one of this did not work out, right? One of this did not work out, but I have one of it work out, two of it work out, three of it work out. Just a very, very simple math. Of course, this statistic here is a little bit small, but you can see, 3 out of 4 actually work out. Okay, that to me as a trader, perfectly fine. Okay, I have like 60 to 70% probability of getting it right. Fantastic. Okay, that's all I need. Okay, so that's the first pattern, right? Impulse, correction, you can project the direction. Okay. The next pattern over here is V-shape, right? We talk about it, the V-shape, impulse, impulse. Okay. So whenever you see a V-shape, my suggestion always is, in terms of the direction for projection, is don't touch it. Okay, just don't trade it. Give it time. So whenever you see an impulse or you see a V, okay, a V-shape or an inverted V, you just leave the market. Don't touch it. Okay. So that's pretty straightforward, right? The second category, no projection. Now the third category is where we talk about the crawl. Okay, let me bring you back to this. Okay, if you're first time exposing yourself to this pattern or coming across to this pattern here, most traders are a little bit confused. Okay, but I'll do my very best to make sure all of you get it. Okay, so you see this impulse, and then after that, what happened? It continues to go in the direction of that impulse, right, which is up. But it's very, very obvious it's lacking the momentum versus the push initially, right? And this is what we call a crawl. Okay, basically, there's no more energy to the upside. There's no more momentum. Okay, now whenever you see a pattern like that, an impulse followed by a crawl, okay, we like to just draw it like that. You do can't expect at least a minimum, at least a small little dip. Okay, so this is the part where sometimes you see a mini correction, sometimes you see a total reversal. Of course, there will be times that this might not really work out and then it just continue higher. Okay, but I would say 60 to 70% of the time you get either a mini correction or a total reversal. Okay, so sometimes it does not work out, but again, I only need 60 to 70% probability and I'm good. Okay, so when you see a crawl, one or two things you want to take note. First, if this is a crawl to the upside, you want to be cautious buying it first, right? Which means that maybe you do not want to buy first. Okay, and then of course, with that being said, the alternative over here is you can consider to look for at least a short-term sell for the mini pullback. If not, you can even look for a potential trend reversal for the bigger, reverse. Okay, so there are a couple of things that you can actually project when you see a crawl. Okay, but at the end of the day, we say that when you see a crawl, okay, look for the reversal. Okay, couple of crawl here that happen, right? You can see this here, it starts to slow down after that initial move. And then this is more of like a total reversal, right? This crawl here is more of a mini correction, okay, mini pullback. If you take a look at it, right, it comes in various shapes and sizes, okay, as we're speaking right now on dollar index here, okay, you can in fact also see this as a crawl, right? Okay, if I were to pull this in this scale, you can see very obvious, okay. It came down pretty fast, and then after that, it starts to slow down a little bit here, and as of now, you can see this is starting to pull back, okay. Whether is it going to be a huge reversal to the upside, or is it just going to be, coming back here and then keep going down? We won't know, right? No trader can tell you exactly what's going to happen. But we know whenever we see a pattern like that, okay, number one, don't sell, okay, because likely this will bounce, right? High chance. You can look for the buy, Okay, but the question is more of like, would it be just, moving up a little bit, or is it going to be a total reversal? That you might need a little bit more experience and maybe a little bit more advanced level to kind of project that, right? Maybe add on different layers of analysis, multiple time frame analysis as well, to give you a little bit more clue. Okay, but for today, okay, take it as if you see a crawl, okay, look for the reversal. Okay, so again, you can see the patterns playing out very, very nicely over here. You get an impulse, you get a flag, you expect this to come down, right? Identify the pattern, project that direction. Identify the pattern, project the direction. Okay, really not that difficult. Okay, so I hope so far so good. Okay, I hope so far so good. Okay. So with that being said, okay, let me just show you some couple of examples that I'm personally looking out for. Okay, they are a little bit clearer. Okay, I mean, let me find those that have yet to happen, because the market is always moving, right? Some of this already done. Okay, so just want to maybe just very, very quickly over here, you can see dollar franc, right? This was the crawl, and we can't expect the projection to the upside, and not 100%, but high chance. Okay, Swiss yen over here, this is a little bit tricky, not like the best and the clearer one, but can you see on, at least on the forward, right? Can you see this here? Okay, which is what we call a crawl, right? So you get a very strong move initially, and then right now what we are observing is this seems to be slow. Okay, so what does this tells you? This pattern tells us that there's a high chance this will come back down. Whether is it going to be down, down, down all the way, we won't know, right? But the idea is, number one, don't go and buy it first, okay? Because there's a high chance it will be pulling back. And of course, if you're looking to sell it, okay, you would be able to target like for reversal, for major reversal as well. Okay, yeah. So just want to quickly highlight a couple of like live examples that is still developing. Okay, why I say Swiss yen is a little bit advanced or even complex a little bit, because if I go down to the 1 hour time frame, right, you do observe that this seems to be a little bit slow as well. Okay, so you can even kind of like do what we call separate the analysis and pattern. Okay, in a way, you start to see, hey, this one here can be a correction as well, right? And whenever you see a correction of this pattern, what is the direction that we likely project? Okay, we'll likely project like this, right? Upside. Okay, so sometimes it's not going to be like crystal clear all the time in the market. Okay, if it is, everyone will be like a super trader, right? But it takes a little bit of experience as well. Okay, for example, like Swiss yen over here, what I say is a little bit more advanced. Okay, it takes a little bit of experience to look at this. So what we have over here to really dive deeper into this case study over here, right, is that on the bigger scale you have that crawl. Okay, first up, okay, this is definitely a crawl, right? On the bigger scale, going back to the forward time frame. Okay, this is definitely 100% slowing already. Okay, on the forward chart. Okay, however, in the 1 hour time frame, you realize that this seems to be doing a little bit of a correction, which tells me that maybe the probability is due to the upside. Okay, and in this case here, we have like 4 hour telling us not to buy, maybe look for the sell, and then on the 1 hour time frame, it seems to suggest that at least it can go up first, right? So this is how we start to merge a little bit. Okay, so the next level for you guys, once you are familiar with all the patterns, is to start applying it in multiple time frame perspective. Okay, so in this case, like Swiss yen, what am I gonna do? Understanding that 1 hour seems to be pushing up first, okay, because we do the projection is to the upside first. I will not look for the sell, but I will not look for the buy either. Okay, because if I'm gonna buy on a 1 hour chart for the projection of this upside, it might be a very, very short-lived trade, maybe couple of days, and then that's about it. Okay, or you might even call it an intraday setup. Okay, so yes, you can still definitely capitalize on this, but because the 4 hour is telling me down, the 1 hour is telling me up. In a way, I can see it as like that's a conflict. Okay, there's no alignment between two time frames, right? So I might choose to omit that trade. Okay, so this is the part where that definitely you need a little bit of practice to kind of like reach or come to this conclusion. Okay, but I want you to, at least for today, you see what I'm doing over here is essentially applying the same principle, right? There's nothing like more advanced over here. It's really just the patterns that I'm sharing with you, right? Correction, impulses, crawl. Okay, and from this pattern, you can see all the magic starts to appear. Okay, that's how powerful once you're able to identify the patterns, right? Okay, give you some more example over here. Okay, if you take a look at this right now, I might need to clean up a little bit on this. Okay, but you can see, right, as we are coming down, you always see what are the patterns that's developing over here. Okay, this is not so clean after this little push, okay, but I am actually projecting a little bit of a crawl here, okay, so maybe something like that, coming down very slow, and we're expecting that if this is the crawl pattern, then the projection in terms of direction is to the upside, okay, so not that difficult. You realize I don't need a lot of things, right? Where am I focusing on the chart? Right hand side of it. Okay, the most recent price, and that's all really I need. Okay, Euro CAD. Okay, so this is also very clear. I think what you see over here is a very strong push, very strong momentum to the downside. Recently, is doing its correction. This is what pattern? The first category, right? When you see a pattern like that, the projection of the direction is continued downside. Okay, so very, very clear in terms of how you establish that. Okay, some others over here. Okay, this one not that clean. Okay, just to show you some cleaner one, right? Of course, you can add in a little bit of flips, but today we'll make it simple. Okay, and I think focus on being applicable, right? This one here, can you see impulse? And then as of now, it's doing a correction here. So when you identify the pattern, what do you project? Upside, right? So the direction becomes very clear. Okay, give you some example where you do not want to be doing anything, right? So take a look at like pound yen over here, for example. Okay, you have this little push up, and then right now it's coming down, right? And that's really about it, right? You don't really see a very, very clear pattern. Okay, you don't really see a clear pattern, right? So what is a clear pattern? You just compare, right? Euro yen and Euro CAD. I think you don't need to kind of describe anymore, right? Just look at the chart on Euro CAD. This is super clear. Look at pound yen, not clear, right? So this is basically just a push down. That's about it. There's nothing else from here. Okay, this is still an unknown. So whenever you do see a chart like that, my personal suggestion is always to just skip it. Okay, because if things are not clear, you focus on things that are a little bit clearer, right? That's how you want to focus on it. Okay, so yeah, okay, for today's lesson, I don't want to overwhelm too many principle and concept. Okay, the objective of today's sharing is really to drill down, how you can get started with Elliott wave, okay, from a more practical and simple way of looking at the chart, but still trading the essence essentially, right? Okay, yeah, so that's the power on it. Okay. Okay, so I do see a couple of questions from Azizo over here. Okay, so two questions, right? To be specific. Okay, one is how do we validate, the correction or the crawl, whether is it complete or not? Okay, and the second part of the question is like, what is the best time frame to kind of like be detecting your entry, right? Okay, so maybe I'll answer the second question first. I mean, they are more or less related as well. Okay. Now in terms of time frame, honestly, there's no such thing as like which is the best time to be looking at it, right? Because as long as it's a technical chart, right? Anything that has a chart, you can apply to it. Okay. But the answer to that question will really rely on like, are you a short-term trader or are you a swing trader, right? So that answer itself would determine the time frame that you're going to be focusing on. Okay. So for example, okay, if I take a look at Euro CAD, right, we are now at the 4-hour time frame. Okay, so this pattern here, right, that is quite obvious on the 4-hour time frame is gonna be more of like a swing trade. Okay, because if you take a trade on a 4-hour chart, you do expect to hold on to that trade at least a couple of days or even maybe 1 or 2 weeks, right? That's how the duration would likely be if you're executing trade on a 4-hour time frame. Okay, now if I go to maybe another chart, okay, let's just say like dollar franc. Okay, this setup here is at least back on like 1-hour time frame. Okay, this little crawl, okay, is at least a 1-hour time frame pattern or a 30-minute time frame pattern, right? Okay, you can see that, okay, because on the 4-hour time frame you don't really see that pattern. You can see very, very small here. Okay, so I'll drill down to maybe 1 hour and 30 minutes. Now for a 1 hour or 30-minute time frame kind of like setup, okay, I would call it more of like an intraday. Okay, not really where, because the term intraday means that you're likely going to exit the trade within the day, but not really the case, right? For me, intraday is just you might hold on to that trade maybe 1 or 2 days or even up to 3 days. Okay, the idea of me is, for me, right, is you don't need to be too specific in terms of like the terminology of intraday and swing trade. Okay, it's more of like if I'm taking a trade on like 1 hour and 30-minute time frame, okay, my stops are tighter. I need to manage it a little bit more actively, right? I need to spend a little bit more time to go and manage that trade. But if today I'm looking at 4-hour time frame, my stops are naturally going to be wider. And then naturally that will be putting that trade into a swing style, and I don't need to kind of monitor that trade too actively. Okay, so to me, I think the difference on intraday versus swing is not so much of the duration only, but it's about how active you need to be monitoring and managing your position. Okay, so if you're taking trade on like 1 hour and 30 minutes, you probably need to check your trade perhaps every other hour. Okay, but if you're looking at 4 hours, then maybe you need to check it maybe once or twice a day, and that's about it. Okay, so at the end of the day, you need to find which one are you more comfortable with, right? Because the principle can be applied to like any of this time frame. Okay. So yeah, okay, that's the part where I think which time frame really comes back down to like how active you want it to be. Okay. Now in terms of like how do we know whether the correction is more or less done, okay, or the crawl is more or less done, right? Usually I say the simplest way to look at it is at least from a duration time frame perspective, right? Not time frame, the duration of which it's developing. Okay. Corrections are usually way longer, okay, than your impulse. Okay. So I mean, this impulse, of course, it came from very, very high up there. Okay. But if you just look at it from a visual perspective, you can see that the duration it took here is like what? It started somewhere around mid-October and then going into like maybe nearer towards end of October. That's maybe about 2 weeks, right? Okay. Versus like if I take from here to this drop, you can see this duration is already significantly way longer than this. Okay. So those are usually the guide that I would, very quickly able to see. Okay. Just to show you again, right? In terms of proportion. Okay. Again, this comes with a little bit of experience as well. Okay, can you see like this move down and then versus the duration in which it used to develop this? Okay, so you can see if I would want to be very, very specific in showing you that, okay, you can see this right from here to here. Okay, that's about, to be exact, it's actually up to here already. That's about 15 bars, which is 15 hour, right? We are on the hourly time frame. Okay, and from here to here, you can see that's like 4 days and 6 hours, right? So you just do that little quick comparison. Of course, you don't need to go and measure it, but visually, okay, that's what I want to highlight. Okay, your impulse is usually faster. The crawl and the correction are usually going to take, I would say in terms of rough estimate, about 2 to 3 times of your impulse. Okay, so you need to definitely give time for the correction in the crawl to kind of prove it to you that, yeah, that is indeed doing a correction, right? So to give you some example, okay, let me pick one and see if I can pick it. Yeah. Okay, so if you take a look, like even on pound New Zealand, okay, what I'm waiting for, okay, you can of course complement it with techniques like what I did just now, channel, right? You draw a channel to kind of do a little bit of projection. But again, you can see over here, right? In terms of visual proportion, okay, how long is this impulse? Okay, we just do a very rough estimate, something like that. So that's about 2 days and 14 hours, right? 62 bars. And this here is perhaps only about, you know, times, no, that's not even times 2, right? That's like 4 days and 11 hours. So that's okay, close to times 2. Okay, but what would be ideal is this stretch out a little bit, okay, and that becomes like maybe about 6 to 7 days, right? And then that impulse correction looks a little bit more proportioned, okay, because 2 days times about 2 to 3 times, that's about like 6 to 6 days plus, okay. And just now you saw me draw this, right? So you can do a little bit of channeling technique here as well, to just add on to that perspective, okay. And this becomes very clear, right? Impulse and then the correction here, okay. So yeah, I mean, there's no way in terms of like perfection we're gonna know exactly, okay. Again, if I've known the answer, everyone would be, a very, very successful trader immediately, right? Okay, but that's the fact, okay? We won't know exactly what's going to happen in the market. There's no perfection in the market. But again, I at the start, right, I've already highlighted, okay, if there is a 60% probability, a 40% probability, that's really all I need as a trader. Okay, yeah? Good. Cool. So very, very quickly, to answer Destin's question here on like the movement of cat yen and gold. Okay. Cat yen essentially, I think, you wouldn't want to. I mean, you need to see which time frame you're looking at. Okay. You do realize that most of the time frame I'm looking at is like 4-hour scale. Okay. This is not something I would pay too much attention. Again, why? This move doesn't really give me a very obvious pattern, right? What is an obvious pattern is if this starts to develop like that. Okay, maybe I'll just draw a little bit, right? So, of course, the drawing of this comes with also, sufficient practice and experience in looking at the chart. But I would say, if we just, okay, even if I don't want to do that, right? Let me just use this. Okay, let me just really like play this out, right? If this develop and just duplicate it exactly like that, would you agree that when you see this, it will be so much obvious and clearer that now this is more of like a flag, right? A correction, right? So what you have here is an impulse and then a correction here. Okay, but if I strip all this, that means if this has not happened yet and this is just here, this is a little bit uncertain. Agree, right? Which means that you probably won't be able to kind of like, give this to a kid and the kid would say that, don't know, I don't know what this is, right? But if this is the case, right, will you agree that, okay, it's so much clearer that this is in fact a correction, okay? And if you break it down, right, why is that the case? It's really because of the duration, okay? If you give it sufficient time to develop, things gets a little bit clearer, okay? So that's on cat yen, yeah? In terms of gold, honestly, it's not something I would even touch. Okay, look at this chart here. Nothing. I mean, there are times where you see things very clear. Okay, just to cover, right, what has happened in the past. Okay, this is a crawl, right? Can you see that? This is an impulse. This is a correction. Okay, this is actually a mini crawl here. Okay, this is not the best correction, so I would not even put that in. But this is junk. Okay, what's developing over here is not the cleanest pattern. Okay, now not all the time you're gonna be looking and able to identify like what pattern is developing. Okay, so go over here, you realize that it's not clean, right? It's not like a clear pattern that you can identify. Versus like things like here. Okay, I think this one very clear, right? Even I would say this here is super clear. Okay, but this here is really not clear. Okay, I mean, can I decipher and project based on certain probability? The answer is yes, but it takes some experience, right? To kind of like decipher this. You need a little bit more of the advanced understanding of Elliott wave. But for today, if you can't really kind of break this piece down, it's perfectly fine, because even if today I can break this piece down here, just to very, very quickly show you, very high chance what will happen is this will probably just be continuing all the way up. Okay, something like that, right? One move down, one move up, back towards 1830, and this would probably still come back down first. Okay, this is how I'm going to project it. But even if I'm able to kind of break this down and decipher it in such a way that I'm going to project in this, there's no trade I'm going to take out of this entire move. Okay, so I mean, we can do the complex stuff, but it's not practical because that's not what traders need, right? I mean, if you want to submit a full-fledged Elliott wave analysis, for studies, of course, yes, right? You probably need to go and break this down and then start to do a little bit of I would say forecast. Okay, but for me as a trader, when things are not clear, what I do is I'll just stay out of it and then I'll look for opportunities that are clearer. Okay, now over here, okay, just to show you a little bit, if you guys would like to, after today, maybe you're inspired with Elliott wave, and you want to move on, to more advanced part of Elliott wave. Okay, this is something that I would say, why I'm able to project that is because when you go deeper and you start to understand a little bit more into the patterns, the various patterns of how wave develop, right? This is a pattern called WXY, potentially developing. Is not going to be 100%, of course, but high chance. Okay, and I want you to see within this move here. Okay, you can see 1, 2, 3. Okay, and then this X here is what we call a reset. Okay, and then why just now I say this will probably do something like that is because this is also another pattern of a 1, 2, 3. Okay, so that's how you can start to project. And again, because this is going up very, very correctively, there's a high chance this will come back down first and then maybe only the long-term push. Okay, so if I even want to, right, I can add in another layer of fibs here as well, because I think if you heard of Elliott wave before, you probably see how Elliott wave charts, come in all the fibs. Okay, and you can see the relationship of them is pretty neat as well, right? Okay, so you see how this three wave play out, 1, 2, 3, exactly at the 100%. Okay, where do you think this comes? Somewhere around 50 and 618, right? That's the relationship that all these fibs were gonna have, right? Where did it touch? 50%. Okay, where do you think this would react? Okay, I can tell you also the relationship of that is 61.8 Fibonacci extension, right? So if I clean up a little bit, just to really show you and get you inspired a little bit. Okay, where is that 618 here? Can you see that? This is perfect, right? Okay, where would it likely go? Here. Okay, and then what will happen is this will come back down somewhere around 50% of this and then bounce back up towards this. Okay, so this is where it can get very, very complex, but to me, you don't really need that. Okay, you can do that if you want to, if you're someone who loves the fits, but at the end of the day, what you're trading, you're actually just trading the pattern, right? Okay, you're still trading that this is very, very slow, therefore you can look for the downside. Okay, if this here comes down as a flag, as a correction, okay, then what you have, you can also take this trade out, right? At the end of the day, pattern can simplify all this a lot. Okay, so yeah, just don't want to overcomplicate it. That's why today we won't go into there. Okay, but I just want to show you eventually, if you're interested, you can move towards a little bit more advanced way of Elliott wave analysis. Okay, yeah. So yeah, I mean, to quickly kind of cover a little bit, recap of what we talked about today so far. Okay, essentially you want to focus on what is impulse versus correction, right? That again is the building blocks of Elliott wave, the fundamental of it, right? The foundation. Okay, if you today cannot grasp the concept of impulse correction, focus on this first. Okay. The second is we talk about patterns, right? Where you start to combine impulses and correction, and we do have like 3 categories over here that we talk about. Okay, so first you have that impulse correction combination, then you have the V-shaped combination, right? Which is 2 impulses together, and then you have the crawl pattern, okay, which is basically a reversal pattern. Okay, so this is the patterns category. Okay, and then from there, okay, what we do next is that you identify patterns, okay, and then you start to project the direction, okay, and we do this a little bit with, we mentioned a little bit also with the time factor, right? So you want to ensure that your correction is, taking up a little bit more time to develop versus your impulses to kind of like identify, okay, is this correction or this crawl more or less completed, okay? So in terms of opportunities for the week, okay, this is already coming down, so I would take away some of those that's already moving. Dollar CAD over here, you can see, right, the pattern over here, but this, market can always develop, right? One thing I want you to know is whatever we share over here might needs to be updated, moving forward, or the whole pattern can evolve along the way. Okay, but as of today, okay, I think you can see this is a very clear crawl. Okay, ideally this is gonna be the correction here, and then what you have is a mini push correction, and then we can expect this. Okay, so I'm watching dollar CAD on this here as well. Okay, dollar franc is already breaking, so this is more or less done. Okay, this one euro franc is a little bit complex, but what we can expect over here, okay, based on all this pattern, is that this would likely be a little bit of a correction. So this can maybe go back up somewhere here, forms a little crawl, and then you can add in some, traditional technical patterns like a double top, and then you look for the downside. Okay, so that's what I'm looking out for in terms of Swiss yen. Euro CAD, I think this one is the clearest and the most obvious pattern, right? So you get kind of like that impulse and then the correction, so your projection is downside. Okay, pound New Zealand, okay, same thing here. You can see this is the impulse, this one here developing into a crawl, a correction, so look for the downside. Okay, pound CAD is a little bit like dollar CAD. Okay, so ideally this one here you want to see it as a correction, therefore you look for an upside. Okay, so you have this little crawl here. Okay, so this little crawl, and then you have one mini push, and then we are waiting for the correction for the upside. Okay, and Aussie CAD I think is very clean as well. This is what we are looking out for. Okay, so you realize that again, the fundamental building blocks that I'm doing my analysis really boils back down to impulses and correction, and then put them into patterns, and then do the projection. Yeah. Okay. So I hope today little sharing over here give you guys some ideas, some insights, to get started and edit with. Okay, and of course I always say you can't expect to master a strategy just by listening, to a sharing session like that. Okay, it definitely takes practice. Okay, but my objective and intention for doing this kind of series over here is to really expose you to, or share with you multiple different strategies and methods, and hopefully, okay, along this series here, you can be able to identify and align with one of the method. Okay, and then you definitely need to go and practice and explore deeper. Okay, I think that's the key of it. All right, that's the intention of why I'm doing this series over here. Okay, so good. Hope it's clear for today's sharing over here as well. So with that, we're gonna end off today's sharing. Okay. Again, for those of you who are trading, quick reminder: always manage your risks. And all the best to all of us. Okay, for the week. So I'll see you guys again for the next session. Okay, see you guys. Bye bye.